Hello my friends, this is Yelena Brezhneva, Global Real Estate Advisor, and we are here today to talk about how pandemic changed real estate market. We will be talking about two markets specifically. We will look into Southern Nevada market and California. So my friends, let's start with Las Vegas. And we will actually start with what was happening in the market before. We will look at the local economic fundamentals. So as we can see, in 2019, Nevada was number 2 state that had plus 1.74% resident population growth. We can see how our Southern Nevada market was steadily growing, and we are looking right now at the graph that goes back 10 years ago. So back in 2008, that population growth was at 2%. Then after recession, it dropped significantly, and then slightly since 2011, it was climbing back up. Clark County population, we can see has significant growth. Clark County is actually number 1 growing county in the United States. And we can see how this progression was going from 2011, where it was dropped, and then it was slowly coming back up, and currently was in the 2018 at 2.2%. If we are to compare growth of the Las Vegas, Nevada, it was on the 3rd place as the largest metropolitan area. So basically, guys, 2.2% net equals 48,337 residents every month. That, my friends, every year, that, my friends, would be 132 people were moving in per day, or 5.5 people per hour. Now we are looking at the driver license that was surrendered, and we can see that 36% of all driver licenses that were surrendered in Las Vegas were Californian residents. And it comes to no surprise, as taxation and certain political changes and climate made people reconsider their places of residence. So, snowbirds, where are the retirees usually moving? Well, as we all know, top state for them was always Florida. They always like to move where it's warm. Number 2 was Arizona, and Nevada was the 5th state where all retirees were moving. And Henderson, Nevada, it comes to no surprise that it was a top city that attracted retirees throughout the United States. Well, prior to pandemic, job growth in Nevada was increasing, and we were on the 4th place, showing an annual growth of 2.62%. Not something we can say today. But employment, Las Vegas was on the 4th place between all the largest 30 metropolitan areas, showing 2.9% employment growth. So, employment growth, where did these jobs came from? Well, construction. In the last 12 months prior to pandemic, 11,000 people were working in the construction industry. Leisure and hospitality attracted 4,500. Financial activities attracted almost as much, 3,700 thousand people. Education and health services, 3.6 thousand. Professional and other business services, 3.4. Government had an increase and had an additional 2,000 people. Other services, manufacturing, mining, and showed in general net job growth of 29,000. Unemployment rates before the pandemic was the lowest in the history. So we can see Las Vegas had 3.7% unemployment rate. US standard at that time was average was 3.3%. So Nevada was on the third place as fastest growing personal income states, with an annual growth of 5.7%. So if we are to look at the economic snapshot of a 10-year growth that Las Vegas was experienced, we can see that we have a significant population growth, we have employment growth. The employment rate was at 3.7%. We can see on this snapshot home closing. So we're going to look into the real estate transactions separately, but what we can see that economy was showing significant growth in Las Vegas. Let's look at the housing affordability. So Las Vegas was on the 12th place. On the first place was Idaho, and on the second was Utah. So if we are to look at the single family median home price, it was $313,000. So Las Vegas was somewhere in the middle. US mortgage rates prior to the pandemic were 3.7. Well, currently, you know, guys, there's 3.1 and 3.2. You can still find those rates. Average apartment rents was at $1,100 here in the Las Vegas Valley. So let's look at the supply and demand. So as you can see, new home closings in Las Vegas were not like it used to be back in 2005, where it was 38,705 closings. So back in 2019, we had around 10,000 closing, but it's still, you could see a significant and steady growth. Here we can see how median closing price on the new homes was climbing and stabilizing. It wasn't as high as back in 2013. We can see there was a drop back in 2014, but then the prices were continuing to climb. Average price per square foot in 2019 was around $200. You can also see how the average price per square foot was climbing up since 2009. New home market shares. Total home sales back in 2019 were 17.6%. So we can say almost 18% of sales is in new home sales. This is, we can see Las Vegas sales and subdivision sales in the Las Vegas Valley. Here is spread of the actively selling subdivisions. Resale home closings, we can see that there was a slight drop last year. Median closing price was around $300,000 on the resale homes, and the average price per square foot was $170 per square foot. So this is your resale home appreciation price chart, which is a great tool for investors. This is the chart by zip codes, and by the way, all of this information I would be happy to share with my potential investors, with the buyers, with the sellers. If you're looking to buy or sell, I'll be happy to send all of the PowerPoints from today's presentation for you. Just don't hesitate to go on my website and or message me here, or you can text me. All right, so yes, resale home price we can see right now is a great tool for investors. So single family residential closing, so this is the median closing price for single family residential homes were $313,000. Condo and townhouse closings were last year decreased, but in general we can see that the median closing price in the southern Nevada was still back in 2019 was pretty strong. Yeah, this is an interesting one. So this is where we see notices of breach and default, notices of trustee sales, and foreclosures. This is from those of you that were looking for transactions, to purchase transactions that were foreclosures. You can see back in 2019 that foreclosures were about 35,000 foreclosures in Clark County, Nevada. And you can see how this rate was significantly dropping. Currently we have about 5% sales and less are foreclosures, my friends. So that actually tells you also that it wasn't that common, well, before obviously the pandemic. Mortgage defaults. So bank-owned homes, you can see right now which bank actually owned the most of the properties. It was US Bank. And this is interesting one. This is the months of availability. So for those of you that are not from Las Vegas, we've always had a shortage of supply, and even today, we'll go into today's data as well, that is prevalent. And let's look at what it used to be. So back in 2019, we closed this year with 3 months of supply. So effective months, month of availability, and you can see here a grid which is color coded from where you have the most and where you have the least. As you can see, that availability varies from price. In general, this statistic is very common. So when we're talking about real estate, and if you're looking to something specific, things change. When we're talking about something that is in different price range, luxury market, and then would be your more standard market. So all of this data that I'm sharing with you today, it's very general. So if you're looking into high rises, condos, luxury homes, the data will be different. So I'll show you this graph that showed this show this at a very different perspective. So as you can see, we had, if you look at the bottom, this is where we can see properties 1 million and up. So we did have a pretty good solid market for luxury homes. If we look at the homes 300,000 and less, this is where you see 1.5 months of availability. That's how we closed back in 2019. So this is something to consider, right? So, and again, if you are interested in those slides, I'll be happy to send these to you. So now median days on the market, we had in December of 2019, 32 days, which is pretty good. Which is pretty good for the transaction. Again, these numbers are different today. So hold on 1 second. Let me just check something here. Let me show you today's chart. So just will give you a better understanding of what we're dealing with today. So this is Las Vegas as of March 2020, okay? And we can see how we actually close this market. So So you can see that new listings, we had 17% less new listings in 2020 compared to last year. We had 21% less pending sales than last year. We did still close at 4.8%, which is pretty strong. Again, this is what we had prior to the pandemic. Median sale price is the same in 2020. It's $310,000. Average sale price is about $370,000. And inventory of homes for sale, guys. This is the important one. It shows that we have 34% less inventory. So this is where you can see that we don't really have that much to sell. That means people are holding on to their properties to see what's going on. So, and this was in the single family market, and the second portion in the townhouse and condo. So this market also shows a reduction in new listings at 22.4%. It has pending sales are less than last year. We have a change of, it's a 30% almost less. Closed sales were still good, so we still closed at 10% almost more than last year. It was actually 9.1, which is still pretty good sign of. But again, it's the side effect of what we had. So what we're trying to understand today is what is going to happen. And I want to show you Las Vegas high-rise market before we move into the next segment. So this is Las Vegas high-rise market, and this is an actual map of concentration of high-rises in Las Vegas. So Las Vegas high-rise market back in 2019, we can see this is units sold. So MGM Signature Suite Condo Hotel has the largest amount of units sold. Yet the average price per unit, Waldorf Astoria was leading this market. Waldorf Astoria was number one at the highest average price per unit, then followed by Park Towers and followed by One Queensridge Place. If we were to look at the average price per square foot in Las Vegas high-rise market, we can actually see that Waldorf Astoria is leading this market at $1,200 per square foot. Again, it's an average, and we know Waldorf Astoria sold, at $1,800 per square foot as well. So Waldorf Astoria is followed by Vidara Condo Hotel with $697 per square foot, followed by Palms Place at $646, and then followed by Via Towers at $637. So what major projects Las Vegas is experiencing? So if we're looking at the map, this is an actual map showing the development projects in Las Vegas. So with blue, we see non-tourist related projects, and we can see Henderson has significant amount of those projects as well. And then we can see right there in the center, in the strip, it were tourist related projects. And then in yellow, these are transportation related projects, and you can see how this all reflected. $23 billion is the amount that was invested in Las Vegas with Allegiant Stadium. Las Vegas rated. This is $23 amount invested in the next 3 years, my friends, and I'll show you how. So we have Resorts World was under construction here in Las Vegas, Majestic Las Vegas, MGM Sphere at the Venetian, Google Data Center, Circa Resort and Casino in downtown, Caesars Forum Conference Center, was UNLV Medical School, fascinated. And this is the list of these projects, my friends. This is just the first page. So we can see that Resorts World was leading this page with $4.3 billion cost. that was currently under construction and supposed to have a completion date in 2021. The Drew was with $3 billion, Jackie Robinson Arena and Hotel project at $2.7 billion, Allegiant Radio Stadium at almost $2 billion, Las Vegas Convention Center at $1.4 billion. And actually this list goes on of all of these projects, and you can see here total almost $23 billion was injected in the Las Vegas. So in one day, we can see here we have 113 residents moving in one day, 153 home closings were in one day. Gaming revenue a day was $28 million. McCarran International Airport would accept 140,000 people, and taxable retail sales a day were $128 million. And Las Vegas would visit 116,000 a day. So this is what it used to be. Is it still the same? Well, we know not anymore. So let's look at all of the current market data. And quick facts. So this is March 2020. So as COVID-19 impact spread across the country in March, and stock markets we know were declining in February, and this decline accelerated, had a quick recovery at the last week of March, yet volatility across all financial markets, and as we know, financial markets impact people's wealth, affected massive layoffs, shook the economy, 3.28 million initial unemployment claims filed in a single week, and we know this number keeps growing. So quick fact for the 2020 March, we still closed pretty strong. We were 4.1% above in March 2020 compared to March 2019. So our median sale price still went up 6.5%, yet at the same time, as we talked about shortage of supply, we have almost 30% less of supplies. So closed sales, we can see they increased in the single family homes. Pending sales decreased by 20% for single family homes, and median sales price increased by 6.3%. And now we're going to scroll down to the bottom. So let's look at the single family market overview, my friends. This is what we're dealing with right now. New listings, we can see that we have in March of 2020, 17% less new listings. We have 20% less new sales in March of 2020 compared to March 2019. We still closed pretty good. We still closed more than last year, March of 2019. We can see that still in March of 2020, days on the market were decreased. Median sale price, we can see, was increased by 6.3%. Average sales price was increased by 4.7%. And then yet in homes for sale, here inventory of homes for sale is decreased by 33%. So which is very important. This is our townhouse and condo market overview for Las Vegas, Nevada. So our high-rise and townhouse and condo market, we can see that we had decreased in the amount of new listings. That amount dropped by 18% compared to last year. We had 27% less sales than last year, yet we still closed in March 2020. We still closed 10% more than March of 2019. So the market was still going pretty strong in March. Days in the market was pretty much the same in this segment, we can see increase in median sale price and in average sale price. And if we look at the availability inventory of homes for sale, we see also decrease in the high-rise and townhouse and condo markets by 23%. And I'll be able to send this presentation to everyone who is currently interested. All you have to do is just contact me and I'll be happy to send it to you. So let's look at the California market, because I have a very good presentation for California, and I'll have the timestamp in this video. So if someone is only interested in California updates, so you could just scroll right to it. Okay, so let's look at our California market. And we just went through our presentation. Okay, so before we talk about the Californian market, and we will review the pre-crisis economy, which we already did for Las Vegas, but we're going to do it again. So we know that the economy was still growing. We were at the fastest job growth in a year. California versus US was doing pretty good. Unemployment shrank back to all-time low. We can see California labor market was how it was doing. So we can see the consumer spending. So this was going still pretty good in the beginning of the 2020. So the overall, the financial shape was pretty good. Consumer debt and financial obligations were pretty low. So now we are looking how financial markets, which we know impact people's wealth and confidence, how it all started to change. And they usually take into consideration the Dow Jones, and we can see how it plummeted by March, end of March, March 26 in 2020. So consumer confidence. So let's look at certain industries. We know the US movie theaters, how much they struggled when domestic movie theater box office receipts showed zero sales in March of 2020. Broadway had zero box office receipts in March of 2020 compared to what it used to be. NBA attendance dropped to zero. We know that happened. Restaurant booking slide, we know right now there are no bookings. And actually you can see here is US total, Seattle, San Francisco, and New York City. The interesting about the hospitality and industry series, we see that restaurant meal delivery is at the lowest right now. Yet you could see that grocery delivery increased. Well, we know that hotel occupancy decreased significantly. Commercial flights in 2020, we're experiencing a severe drop in that. So concerns in the real estate economy. Let's look at this. So this is closed sales by area. So we have Bay Area, South California, Central Coast, and Central Valley here. And you can see the color-coded graph started the first darker blue column. That is beginning of the March. You can see how this color coding changes to end of the March through April 3rd. So you can see the significant decrease in closed sales throughout the March. Let's look at the new listings. Can new listings stabilize the market? And we actually show a similar tendency towards decrease in appearance of new listings throughout California, Bay Area, South California, Central Coast, and Central Valley. Pending sales still remain pretty weak in the Bay Area, South California, Central Coast, and Central Valley. We are noticing drop. So real estate. And this is where we're going to have an opportunity to look at how it used to be, so we can actually compare the forecast. Let's take a look at this, my friends. So so we are entering a certain recession, as we can see all of the banks are closing and they're starting the quarter of 2020 with a big minus, the financial industries. But take a look at this very important chart. And I'm going to try to make sure it fits your screen right now. Okay, I think we can see it right now. So this is what is interesting about this. This is a SARS outbreak in China in 2003. And this shows the graph of what was happening. It shows when the outbreak spread, the recovery process. It shows Fukushima disease in 2011 in Japan, and it shows MERS outbreak in South Korea. So timing is everything. So when we will see a peak in California, according to this graph, according to how the disasters were spreading in those previous moments, we can see in this chart that by May 1st, there is an expected growth, and after May you can see there is a considerate drop in the spread. And if you will look at the color coded, again, this presentation is available, I'll be happy to share with everyone. You can see there's a color coded graph down here that shows hospital availability. So if we are to rush to normalcy, this could increase the severity. So this is the graph showing the social distancing for 14 days could lead to 128 million total infections, yet social distancing for 2 months will drop this number to 14 million. So, conclusion. Economy was good, and we know that, but the virus changed everything. Yes, we know that. Unprecedented in terms of size and of economic scope. Oh, absolutely. So data is still rolling in the weeks, probably in the months, of course, and we know that unemployment will drive, bring negative impact. Absolutely. So do we see already effects on the housing market? Yes, absolutely, we can see it. So, and the key question hinges on how long this stay in place will last. Yet at the same time, we understand that severe pullback may be best chance for quick recovery. And this is the list of the sources used for this presentation. So it was interesting to go back in history and to see all these charts and all the comparison of how it was before and how it's going to be now. So these $23 billion in Las Vegas, all these projects, will they be continued to be built? Absolutely. Do we know when? No. So is there going to be a time delay? Yes, there's going to be a time delay. It's understandable. But at the same time, this was a pretty solid foundation. The economy was going strong, and the economy was pretty stabilized. So at this point, so hopefully by May, this market is going to leave the peak zone. So in April, we are still going through the peak, and I know that stay in place order has been continued in California till March 15th, as far as I know. So what will happen in Nevada? So far we have it till end of April. Probably it might continue as well as California through mid-May. But according to what we've seen so far and the predictions, that it should start coming out of that phase in May. Once it peaks, this should start dropping. Well, my friends, that was an interesting travel back in time. I hope that you will find this information useful. Again, I'm happy to share with anyone. Actually, what I'm going to do, I am going to make a link on my website for the download. So if you have time, you can go check it out, find it on my website. I'll make a button, download button from this presentation for all of the PowerPoints that I was using. If you can't find it, so you feel free to email me and I'll be happy to share it with you. I am hoping to see you more on my YouTube channel. I'm looking forward to have bringing on some interesting people on our YouTube live stream where we can share more information while you are still staying home. So this was Yelena Brezhneva. Make sure go to my website to check out for more information. And it was a pleasure having you guys today. And of course, happy Easter week.